G'day expats. Welcome to another episode of Expat Chat, episode 180. We are reaching for the sky and they just keep getting higher and higher, those episodes, more and more as we keep going.
Too
As
punchy by
always, I'm
Christmas.
as always joined with my co-host, Brett Evans, the managing director of Atlas Wealth Management over in the Europe, Middle East and Africa, is the founder of the Atlas Wealth Group, friend, mentor, business partner, all the above. Good morning, Brett. How are you?
Purveyor of fine meats. Anyway. All right, I'm good, thanks. I'm good. And to the folks on the call, g'day. And as always, joined by mate and colleague and also business partner and has a lot of other titles, confidant, Mr. James Ridley, Managing Director for the APAC region, mate. G'day.
Good morning, mates. And God, it's been an eventful 7 days since we
I'm
probably
tired.
recorded the last episode.
I think I said, I'm
I'm
tired.
tired. You're tired. I'm tired. I think my eyeball's about to fall out of my skull after
Well, you've
an
got an
interesting
excuse.
night.
You've got an excuse. You got a baby, you know. I don't. I got a 14 to
Yeah,
17-year-old.
that's true. That's true. That's true. But no, listen, it's been an eventful 7 days, and I think today I just want to unpack, some important updates, not just back in Australia, but what's going on over in the Middle East.
Hmm.
Um, I want to jump on the budget and what's going on there, but I think before we do so, always keep the compliance officers of the world happy. A little
Exactly.
disclaimer, over to you.
All the goodies we're going to share with the amazing people on the call today should be treated as information and educational purposes only. Please do not construe this as personal advice. If you do need to get personal advice, please speak to a licensed professional like Atlas.
God, you've got that down pat, don't you? Jeez.
Not my first time.
Now, yeah, that's right. So 180 times apparently.
Yeah.
But the budget. So let's talk about it. So we know the budget was announced early in the year, and it was the largest tax reform proposed, probably in the last 30 years.
Yep.
Um, Now, just a reminder, with Labor having the numbers in the lower house, pretty much anything that they want to put through the lower house, the House of Representatives, will get through and will move through to the Senate
Yep.
without being challenged. And that's just based on the numbers. This week was the week that actually entered the Senate, and then it was debated on. Senate Estimates Committee asked questions. A lot of questions couldn't actually be answered very well by Labor. And already the CGT and trust changes have entered a bit of a redesign. So
Yep.
firstly, on the CGT, and I'll come to the trust soon. So capital gains tax, there hasn't been any changes to negative gearing or the cost-based indexation method. That hasn't changed as we know
Yeah,
it
that's
just
not going to
yet.
change. Yeah.
I don't think so. I don't think so. What has changed in what they are going to start redesigning is how the capital gains tax impacts small businesses and small business owners, because
Yep.
it was going to have an impact on the CGT concessions on small businesses when they sell and wind up and those sort of things. So they are providing carve-outs for small businesses where they will still be able to access and tap into the 50% CGT discount concession, as well as some of the other pre-existing small business concessions, CGT concessions. The other one was changing the criteria. So it was essentially broadening or expanding the number of businesses that could qualify for these small business CGT concessions. So right now, it's based on a net asset value of 6.5 million and turnover of 2 million or under 2 million. They're broadening that to now 10 million. So a
Yep.
lot more business owners will qualify for it if they've got quite a good business and large business. So that's one change that they've brought effect to. We haven't seen the writing or the draft on that, but that's what they're proposed they're going to change and fix. The other one is the draft legislation on trusts and how tax applies to distributions and those sort of things within trusts. We still haven't seen the legislation, but Albanese has already come out and said, listen, we are going to fix it with regards to discretionary trusts. So that means that they are removing the minimum 30% tax on income distributions that comes from testamentary trusts. And just a refresh on what the hell is a testamentary trust.
Yep.
Often testamentary discretionary trusts are formed through your will and estate plan when you pass away. So your assets are pulled and moved into this testamentary trust, and depending on your beneficiaries, assets are put in there, income distributions then come out of that and then go to your beneficiaries. The benefit of a testamentary trust is that it's taxed like an ordinary individual within the trust, and then the income after tax proceeds can then go to the beneficiaries. There's a lot of other reasons as well that testamentary trust can be a very useful tool as part of an estate plan. I won't go into that today. I think that's probably a good episode, another episode that I'll unpack with our listeners.
I think so.
So that's a really good change, but that's all we've seen so far in terms of some of the tweaks. So they're granting tax concessions to small businesses, startups and testamentary trusts in a partial sort of surrender or based on the backlash that they've received since the budget was announced. And this is really common. This is sort of the start of things where we start to see a bit of redesign as through the process. Because of the changes which are being brought in, I think they're going to be hard pressed to get it passed by 2nd July,
Yeah,
2026. Remember,
I
they
agree.
wanted to ram the CGT, ram the negative gearing through as of 2nd July. Don't think that's going to happen. Just be mindful though, because they have announced it, even if it was legislated later this year, say October, November, December, they've already announced it. So
Yep.
they won't sort of push it out one more year. That's what we've seen in the past. If it goes through a complete restructure, it absolutely will. But next steps, getting the refinements, CDT, and any changes negative gearing, and then we're still waiting on the trust definitions and sorry, the trust draft legislation, I should say. So still to come very, very soon in part of that second tranche as part of the budget measures. So be interesting to see what further redesign goes through. But even in the last week, we've seen a lot of changes as well. We've seen and changes in regards to probably how the Australian public would look to vote. One Nation has just gained a lot of momentum in
Yeah.
the polls. Um, I'd say the coalition has as well. One Nation has a very important election, state election later this year in Victoria. So if the numbers shift a bit in the Victoria state election, could be a
That's it.
very interesting next year for Parliament.
With a state that is typically pro-Labor, for them to
Mm,
swing to One Nation would be massive. That is a
massive.
protest vote and a half.
Yep, absolutely. So just this year's, even though there's been a lot going on, it's probably one of the more controversial political
Mm.
years for Australia. Absolutely. But I mean, that's what I wanted to just raise today. But also, not only that, some big things afoot and changes over in the Middle East.
But the sandpits, yeah, becoming a bit more stable. We've now got the boys and girls gathering together in Switzerland, signing the MOU, the 14-point outline with respect to not a ceasefire, not a cessation of war, but a ceasefire for another 60 days. But what was interesting that came out of Iran was the lead negotiator said he's calling the war off. So the problem, you take that and go, fantastic. Even though
Mm,
it's a 60-day agreement, we're done. We can relax. Unfortunately, there's three other, sort of political players in the Iranian ecosystem that may not be agreeing. So that's the big problem anyway. But the good news is they're all gathering together at Berghof or Bergen something anyway, the resort in
yep.
Switzerland to sign everything off. And to
Yep.
me, I think, it just gives people a bit of breathing space now. Once the straits open up, yes, there will be an economic cost with delay. Obviously, 145 ships a day on average pass through the straits. Certainly not that many passed, for the last 3 months. So there'll be a backlog, a normalization, I guess you could say, when it comes to supply chains and those sort of things. But it is a positive step forward. And yeah, to me, we'll see more detail come out of this. There's been a lot of talk about this $300 billion fund to rebuild Iran and that sort of stuff. So it could actually be, if it's being reported correctly, could actually be good for the region, in terms of this. I
Yep.
mean, apparently half of that has already been pre-funded by private business. So this is not government money they're going to put into Iran. This is actually private businesses throughout Asia, Middle East, Europe, United States, South America. So it's quite interesting how businesses are actually stepping up and saying this is an opportunity here. And look,
Mm,
who knows? I mean, it might knock the mullahs and the IRGC hardliners on their back feet and sort of say, well, look, better the devil you know than the devil you know, and we can, because the economy in Iran, even pre-war, was destitute.
pretty shocking.
Yeah.
Yeah.
So,
Yep.
but anyway, we'll see. Watch that space. A week's a long time in politics and war, so we'll see what goes through there. But certainly probably the most positive steps forward so far.
Yeah, absolutely. I think probably the biggest positive step we've had, and probably one that carries a bit more weight. I feel like anything we've heard when it comes to these sort of announcements, the market's sort of going, oh yeah, I believe it when we see it
Yawn.
sort of
Yeah.
attitude. Yeah. So this one seems to carry, yeah, significant more weight that it might actually come off. So very exciting. It'd be good to see oil prices come down, alleviate a bit of that inflation. We know that back in Australia, we had the RBA meeting earlier this week and it was a hold. But
Dot, 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 though,
like
wasn't it? Yeah.
yeah, it was, but like I've been saying to clients, we've still got to see the quarterly, the June quarterly sort of CPI readout, and I think the expectation should be that that'll be pretty ordinary. That
Yeah.
might even have a six in front of it, to be honest, because
I
that
think it will.
captures
Oil.
the whole conflict and
Yeah.
the massive increase in oil and fuel and at the Bowser, but then that flows down to every industry, and then obviously that's
Input
having a
costs.
contagion effect. Yep.
Yep.
So it's going to be pretty bad, but I also think the RBA knows that, and just because that readout's bad, they won't necessarily go up again. I think that just means okay, we will continue to hold, and if it does go up after the next readout, they will go again. When you
Yep.
look at the breakout of the big four banks, Westpac is actually the only bank which is saying that the RBA is going to increase two more 0.25% increases by the end of September. So taking it from 4.35 to 4.85. So that's pretty big
Huge jump.
in terms of everyone who has an investor loan in Australia would be having a seven in front of it.
Yep.
The NAB, which is Sally Auld, she was saying it'll be a hold and it'll come down towards the end of 2027. That's when the rate sort of cutting cycle will start again, the easing. And I believe not Westpac, sorry, ANZ is similar and so is CBA. So just have to, as always, wait and see. But just expect that CPI readout for the June quarter will be pretty ordinary.
You know me, I like to put my neck on the block because, sort of running towards a fire instead of running away. I'm going to go on the record. What's today? The 18th of June. And I'm going to say Westpac is 100% correct. And I'll tell you why.
Yep. Yep.
One thing the RBA is petrified of is embedded inflation. And the
Yep.
longer they leave this, the more embedded it becomes into costs and expenses and everything, and then it becomes the norm, and that
Yep.
terrifies the RBA. I think they're going to want to
Yeah.
smash this on the head. Yes, they will take into account oil prices and obviously the excise finishing end of the month, so that'll certainly jack things up as well too. I think they'll take
Yeah,
that
it
into
will.
account, but I still think there's another rise coming, at least one, and I think Westpac might be right. I think it might be two, because to me they just need to smash it hard, bring that inflation back, and then they can go into that easing cycle. I don't think they're going to want to sit on the sidelines and potentially, if they don't raise, sit here with inflation with a four in front of it for the next 2 years, because that'll just kill the economy.
Yeah, it will. I'd be more worried about probably also the unemployment rate tracking up and then us
Yeah.
having a prolonged recession period, to be honest.
Yep.
And if
It's
you
already
have
happening
stagflation,
on
it's
the
pretty hard to get out
unemployment.
of.
Seeing a lot of
Yeah.
announcements, coming out. Big companies are relocating jobs overseas, or AI,
Yep.
or everything. And we're not talking 2 to 5 people being sacked. It's hundreds and thousands in big companies
Yeah.
going. So, that
It's
unemployment number did tick up, in the last read. And well, what's the next one?
Well, I mean, what also hasn't helped that is this whole tech wreck. You've had all these layoffs earlier this year because you've got, Atlassian's an easier one, but they let off what, 10 or 10%, 10,000 jobs or whatever, because they
Yep.
openly said we're focusing more and investing more into AI. So it's like, okay, are there going to be new jobs created because of AI? There will be, but it's probably not going to pick up the slack of all the layoffs that we've seen since the
Yeah.
start of the year. So yeah, it's still going to be one of those years, a difficult year, which could carry on over to next year. Again, share markets seem relatively resilient, especially the US or more probably the international markets. ASX, a bit of sidestepping, which is probably to be expected given the current economic climate in Australia.
Yep.
But there has been some great picks as well. I think look at Macquarie. Macquarie's been running wild since the start of the calendar year. I think it's up nearly 30%.
Yeah.
So still some big companies doing great things on the share market. But
And we also have
it's
to
probably a bit,
address
yeah.
the spaceships, SpaceX.
It's trying
So
to get away with it.
yeah, no, we got to address, because we get lots of questions and people are sort of
We
saying,
do,
"Do
yeah.
I? Don't I?" With property and commodity assets, you make money on your way in, you can't average down. So with shares, you can. And I've been saying to clients, look, you're paying a premium at the top. If everything comes to fruition in a very short time frame, yes, it is worth the current price. But Morningstar did an amazing report, which people can Google and read, and they valued it between 700 billion and 1.9 trillion. And they said,
Okay.
how you get that answer is if they deliver on their um, AI capabilities in space in terms of,
Yep.
AI centers in space in two
Yep.
years, then yes, it's worth $1.9 trillion. If it's a
Yep.
no, it's worth 700 billion. So have a read of that
Yeah.
article,
Well,
folks, and make your own minds up when it comes to whether you want to pay at the premium. I think there's also that emotional attachment, and everyone's heard me on the
mm,
call before talk about
mm,
the best way to look at a stock is like pouring a beer. If you don't tilt the glass and you pour the beer, two-thirds of it is actually beer and one-third of it is that froth.
mhm.
It's up to people how much froth they're willing to have on their beer when it comes to whether they buy a stock or not, because there's a lot of froth in that beer. It's like 50-50.
Yeah, I mean that article. I'm reading one of the other articles that Morningstar put out where it says the top 10 market cap companies on the S&P 500, their collective or average P ratio is trading above 68, whereas the rest of the 490 trading P ratio is about 25 on the
Yeah.
S&P 500. Um, I think when they report their earnings September quarter, which will be their first report, they won't report for the June quarter. I think you'll see a lot of that froth come out pretty quickly.
Yeah,
It's trading like a meme stock at the moment.
it is. And I think there's two reasons for that. I think there's this general underlying belief that it's part of the S&P 500. It's not. The S&P index
Mm,
actually knocked them back to include them in the index. So if you own S&P 500 shares, you do not own SpaceX. And the reason being is they want SpaceX to do what other companies do before they get included in the index, which is 12 months of trading, profit, delivery and those
mhm.
sort of things. The other problem too that I feel a bit concerned about, and it can go for and against the stock when this happens, there's only a 4% free float.
Okay.
So just to explain that to people out there, if the stock is worth $1.9 trillion, only 4% of that value is available in stock that is tradable on the market. So
Oh,
96% of the stock is still tied up. A lot of the original founders, those holdings are under escrow for the next 3 to 6 months. Some are 12 months, depending on when they came in. So
lock-in periods. Yep.
exactly. So it might be fine now, but when some of these founders who put money into SpaceX when it was valued at $50 million, not billion or trillion, $50 million back in 2020,
Mm.
when they want to pull their money out and their shares are unlocked, then you might see some upset selling pressure when those windows open. So just be mindful of that as well
Yep.
too.
Yeah, that's right. We have multiple clients that are benefiting and will benefit from SpaceX going forward because they are former employees or current employees, and they have lock-in periods, but even their lock-in periods sort of minimum 6 months before they can start to trade, which is, I think, admittedly, that's really common. That's really
Yeah.
common. Yep,
Yeah, of course it is. And
that's
look,
exactly
so that free float will increase over time. But with that, you just want to make sure not everyone's running to the exit.
right. No, well put, well put. So we'll see. It's interesting that S&P 500 will include them. I know they're in the Nasdaq, but
NASDAQ, yeah, and the Russell too.
I think the Nasdaq had to change some rules to let them in. I have a
Yeah.
feeling
Free
there's
float
an article
rules,
on it.
free float rules,
Yeah,
and also to there was another thing they had to change. Anyway, yeah. So they bend the rules, and to S&P 500's credit, they're like, no, these are the rules. Abide by them. We'll look forward to seeing you next year.
yeah, yeah. It's good actually. I think, and unfortunately, a lot of people who own the S&P 500 probably think they own SpaceX, but they don't.
Mm. I've spoke to four
So
people yesterday who are they'll convict, they're like, no, no, we own it. And I was like,
yeah,
you don't. You do not own
yeah, you would.
SpaceX.
Because you would have seen the S&P 500 jump a significant amount in
Yeah.
that short period, but it hasn't. Yeah, that's exactly right. All right. Well, I mean, plenty going on at the moment. Middle East, that's good news. That's good news for all. Back in Australia, the budget getting redesigned, that should continue to be good news if it keeps going through this redesign and restructuring. Obviously, we're coming out to the end of the financial year, so make sure that If you've got, you know, just under 2 weeks to get any contributions into super and all those sort of
Yeah.
things. If you're doing your tax planning, we did another episode on it. So if you're unsure, jump on that episode if you're looking for any quick tips on tax planning before 30 June. But it's all coming to a close very quickly for another financial year.
And shame on the House of Reps for wading through what is, as we've seen with the Senate, a woefully inadequate piece of legislation. So, they should
Yep.
be ashamed. But then again, are we surprised? No.
No, not at all. They've got the numbers, so it's probably they didn't probably talk about. They just all rose their hand and go, "Yep, yeah,
That's right. Yeah. Are we going to the bar?
send it
Yes.
in.
Yep. Are we putting this through?
Yep,
Yes.
send it in." Angus Taylor calling Albanese a wanker, I think, or can't remember what was his comment. Yeah, he did
He
in
got quite aggressive, didn't he?
he did. I think he. Oh, sorry, I can't remember now. His quote. I've absolutely butchered that. Let's have a look here. In I think he called him arrogant prick. Sorry, there you
Yeah.
go.
Yeah.
And he got in trouble for that. But
Mm.
anyway, we'll see see
Hey,
how it
time will
finishes off
time
for the
will
year.
tell. Time will tell.
Yep.
We're just humble
Yep.
people on the sidelines eating popcorn and watching with amaze and disarray. But
Yep.
we'll keep everyone focused and maybe let's let the folks finish their episode for the day and we'll catch everyone next week.
Sounds good. Thanks for tuning in, guys. See you on the next episode, Brett.
Thanks, mate. Take care.